Okay, good morning, everybody. This is Mike Berry, Executive Director for WASBO. That was me playing the classical guitar there while you were waiting. I hope you all enjoyed that. We'll try something else next time. So welcome to today's WASBO webinar on the IRS 941. This topic has come up at several of the regionals. I want to thank WASBO Treasurer Brian Adesso for bringing it to my attention at WASBO and for suggesting that we do this webinar this morning. I also want to thank Jeff Dvorachek from Hawkins Ash. Jeff is a CPA and a partner and is our presenter this morning. The presentation will take a little under an hour, depending on how many questions and other comments we have during the hour. Everyone will be on mute except for the presenters. If you have a question to raise, simply go to the Q&A section and post your question there. So we are recording this webinar, and it will be available either this afternoon or tomorrow. We will email out the link and we'll make it available on the website for WASBO as well. So with that, let me turn it over to WASBO Treasurer Brian Adesso.
Good morning, I'm Brian Adesso. I'm the Director of Business Services for the Menasha Joint School District. First, we want to start off with a little poll question, just to see how many people on this actually are doing the 941. You're able to do, I guess, all the poll questions right now, which is fine. So this webinar came about because I would answer no, I'm not responsible for completing the 941, but Judy in my office is. And she kind of came to me and asked me about these changes and what we should do about them. And I didn't have a clear answer, and I don't like receiving love letters from the IRS. I would like to break up with the IRS, but that's not possible. So we kind of talked with WASBO and got this together, and reached out to Jeff, and he graciously agreed to help us out and went way above and beyond, and we're excited to bring this to you. So I'll be monitoring the question and answer area in the chats, and we'll be sharing with Jeff, and hopefully he'll be able to answer them. So with that, we could start the presentation. Thank you all for attending. But Jeff, you see the poll, right?
I do. Okay. Well, good morning, everybody. Like Brian said, my name is Jeff Dvorachek, and I'm a partner here at Hawkins Ash. The majority of what I do is on the tax side of the practice, but as many of you know, we also have a pretty strong school district and municipality auditing section within our firm. I get to stay on the tax side, they get to do the audit side, everybody's happy. So that works out really well. I put my contact information here on the first page, just in case you had any questions, but like you said, you can just run those through the chat feature, and Brian's going to be kind of looking at those as we go along. So without further ado, let's kind of go ahead and start the presentation. What I'm going to talk about today is the 941s and how it's changed from the second quarter of this year to the third quarter. And as we know, I think it's changed from the first quarter to the second, and the second to the third. And I think even the third quarter, this is its second rendition of the form. So we'll talk about that here in a little bit too. Also, we're going to do a little bit of a refresher course. So we'll talk a little bit about the qualified sick leave and the family leave, just to make sure everybody's on the same page. We'll also talk then about that expanded family leave. And then I saw from the poll question, there are at least a couple people who are doing either the employer or the employee payroll tax deferral. So we'll talk a little bit about that today. Like I told the folks earlier, I'm kind of a bouncer. My head's gonna bounce all over the place. So I'm just gonna get rid of the video part of it here, and we'll talk about the content for today. Okay, the third quarter Form 941. What you're gonna notice is that there's really been a couple changes to it. Not drastic, but just a couple. You're still going to use the one that is revised in July of 2020. And I say that because some of the things that we're going to talk about today were actually not changed until August of 2020 but they made those changes on this current form. So the July 2020 form is still your most current form as you're preparing these for the third quarter. A couple of the changes from the second to third quarter were on line 13B, which we'll talk about. And that is where the deferred amount of Social Security tax goes. And then also some of just the questions that they started asking here, I believe in the second quarter. And that is on questions 24 and 25, those have changed. So if your question 24 does not look like this on the file or on the form that you're preparing, you're going to want to look for the most updated July of 2020 form, because this will be a telltale sign whether you're using the correct form or not. Assuming that most people are using software, it shouldn't be an issue, but just to make sure. Okay, I promised you a refresher course, so let's talk a little bit about the refreshers. FFCRA, sick and family leave. Now, I'm going to keep referring it to the FFCRA because it's just a lot easier for me than trying to say the Family First Coronavirus Response Act. I'd probably be saying that, and it would take up all of our whole hour just making sure I say that. So we'll go with FFCRA for this, and just realize that that's basically your sick pay and your family leave and in your extended family leave aspects. For the sick leave part, the sick leave part is really where you have an employee who is directly showing symptoms. So this, in order to get the sick leave pay, they have to be the one that's showing symptoms. They can't be looking for somebody else that has symptoms, child, relative, things like that. This has to be them. And under this particular sick leave, you can pay them up to 10 days or 80 hours for full-time, or the equivalent of that if they're part-time. So let's say somebody just works 20 hours a week rather than 40 hours a week. Well, you're going to pay them still for 10 days, but it'll only be up to 40 hours because they're only working half the amount of time. Like I talked about earlier, this is just for the employee that's showing symptoms or that's actually sick. For this sick leave, because they're the ones directly impacted, the IRS, the DOL has stated that you can pay them up to 100% of their salary, up to $511 per day. Now, most people aren't going to make $511 per day. So for the majority of, I think, our employees, they're just going to get their full salary for, up to that 80 hours, assuming they're full time. This 80 hours can be used anytime between now and December 31st. So as of December 31st, if they're on their 8th day, it expires. I don't believe you can go into 2021 and use any of those sick time. It ends on December 31st. So if
Jeff, we did have a quick question on, have you heard of anything that FFCRA is extending beyond the end of the calendar year? I have not heard of anything yet.
Yeah, there's nothing that I have seen at this point. Now, with a lot of the different things that passed around that time, PPP and these kind of things, there is a lot of talk out there that probably after the election that there will be some changes made to them. But I don't see anything happening until after the election. And for this, I have not seen anything that tells me that they're going to extend it at this point.
Thank you.
Okay, now we're on the other side of the spectrum. So this is the family leave. And for the family leave, essentially this is for somebody that has to take care of somebody who either has it, has to be quarantined, or maybe their school or their daycare isn't open. So the employee has to take care of somebody else. They're not directly sick, but someone that they have to care for is either sick, quarantined, or some other reason. With the other one, we talked about it. They would get 100% of their pay up to $511 a day. But under this scenario, they only get 2/3 of their salary up to $200 per day. So obviously, if somebody makes $300 per day, they'll end up with getting paid $200 per day. Now, there's really nothing that says that the school districts can't pay them their full salary. It's just you cannot pay them less than 2/3 of that salary. And once again, this expires on December 31st of 2020, same as that other sick leave did.
Jeff, there were some questions on the employee side, and on that, if the employee's quarantined, they also qualify. I think you said if they were just showing symptoms.
You're right. If the employer has been advised by a doctor to quarantine, then they also would fall under that first category. That is correct.
Thank you.
And then the third aspect of this is going to be then the expanded family medical leave. And that ends up being for 10 weeks. And for full-time and the equivalent of part-time once again. So, you know, up to 5 weeks if you're a part-timer working 20 hours. This is if the employee is unable to work because like the child's school or daycare is closed. Not necessarily because they're sick, but because for some reason their child's school or daycare is closed. That's what qualifies for the additional 10 weeks of sick pay under this expanded family medical leave. Now, when you look at this, it's the same rules as the regular family leave, which is the 2/3 of the salary up to $200 per day. But the difference here in comparison to the other one is that the employee must have been employed for at least the last 30 days in order to qualify for this 10-week one. And this 10-week one also expires on December 31st. One of the things that we're not going to talk a lot about today is, let's say that, you know, my employee is showing symptoms, or I have a family member who has tested positive, but my employee has not tested positive yet. You know, which category do they fall in? How do they get the sick pay? We can talk a little bit about it, but I'm not going to be the best at doing that. But one thing that we have used as a firm and that I've used personally is the Department of Labor has really put out a great list of question and answers. And right now, as of yesterday, it was up to 103 questions. And just by going to that website that I have listed on the bottom of this slide, you can go and look at some of those questions, whether you're looking for definitions, eligibility, coverage, application, things like that, you know, returning to school for children. Those are the kind of answers that the DOL is answering on a regular basis. Now, we just talked on the last slide that somebody had to be employed for at least 30 days to be able to get that expanded family leave. Well, if you want more information on that, you can just go to the eligibility section and go to, how do I know whether I have been employed for 30 days? In here, there's also answers on, as an employer, what kind of documentation do you need to get from the employee in order for them to qualify for either the 80 hours of the sick pay or the 80 hours of the family medical leave. So this is just a really great resource.
Yeah, and Jeff, we're getting a lot of questions that I think this resource would answer. You know, just about the first 2 weeks being unpaid, then going 2/3 for family extended, and schools are considered open even if they're virtual learning. I would say yes to that. My unofficial answer, please define a closed. Really, for us, it comes down to the family's affected by a student being at home, that qualifies for it. It doesn't really matter what, if the school's closed via virtual or closed and no learning is going on. And then the last one was the family leave. Can you continue it after the 10 days for an employee? And we've been doing just the 10 days and not going on to FMLA leave after that.
Right, and I think one of the items that this answers, I just looked it up the other day, was can you use the 80 hours of sick pay, and then as soon as that's up, then use another 80 hours worth of family medical leave? And those two are concurrent. So you essentially, I don't believe it's not my understanding that you get 160 hours of those two pots. You get to use 80 hours between those two pots, before you would then go into the extended family leave if your circumstance applies for the next 10 weeks.
And I agree with that, Jeff. That's how we interpret it too. It's pretty much the same thing. It's just added features to FMLA, but it's still underlying FMLA leave.
One of the things that we should talk about is kind of how the payroll works for the employee and the employer side. So we just talked about, the three different areas of the FFCRA. If we're looking at it from an employee's point of view, they're really not going to see anything different, because whether they get the sick pay, whether they get the family leave or even the extended family leave, for them, you're going to take off the exact same taxes that you did before. So you're going to take off the FICA, you're going to take off the Medicare, federal, state withholding. It's going to show up on their W-2 just as taxable wages, just like any other type of wage. The difference is really in regard to the employer side of it, because the employer is not required to pay in their portion of the Social Security for any one of those three buckets. So once again, employee checks look exactly the same. It's everything on the employer side is where you save the 6.2%. But the employer is going to be required to pay the Medicare tax, and that we'll talk about in just a second here. So really, the employer is saving the Social Security portion only when it comes to the FFCRA. And the reason why I say it's just the Social Security portion is because if you look right at the instructions clearly say that if you're a government employer, you aren't eligible for the credit that's available for other businesses for the qualified sick and family leave wages. However, with any employer, government employers aren't liable for the employer share of Social Security tax on the qualified sick leave wages paid to the employee. So that's what we just talked about in the last screen, is that the employer side will save the 6.2%, but not the employee side. And I think this ends up kind of being an unfunded mandate, because if you were a for-profit business, you would get a credit for the wages, for some health insurance, for the Medicare portion. You'd get a credit for that, but that credit from everything that we have read so far is not available to government employers. So as we go through the form, what you're going to see is that there's not a lot of things on the form that are really going to change for you.
Jeff, could you just go over one more time? I think there's some confusion with the employer share. There is a deferral piece, but then there's an employer share that's not deferred.
That is correct. So as we know, we have, when we have payroll, the employees have 6.2% of Social Security taken off of their check, and us as the employer have to pay in 6.2% on our side. So in the employee's account goes a total of 12.4%. For this particular sick pay, these sick pay wages and the family medical leave wages, you have to take the 6.2% for the employee, but the employer is not going to be responsible for paying in their half. So essentially they get that savings.
So it's not a deferral, it's just that we don't pay it.
That is correct. Yep. And we'll talk about deferrals here in just a little bit. All I'm referring to right now is just whether the employer has to pay the 6.2% on sick pay and family leave wages, which they don't.
Perfect, thank you.
So that brings us right into our next topic. So let's talk a little bit about the payroll tax deferrals. There's really two. The first one was actually a direct result of the CARES Act. And that was so businesses that were kind of cash strapped during the COVID crisis, where a lot of businesses were shut down, what they could do, and this includes government employers, is you could take the 6.2% of your employer's portion of Social Security and defer that to another year. Now, let's go back and just make sure we're clear on this. If you pay sick wages or you pay family leave wages, at that point, the employer does not pay the 6.2%. So that is a true savings. For all of your other wages that are not sick pay wages or not family medical leave wages, just your standard wages, the employer actually has the option of not paying in the Social Security portion of those wages, as long as the period is from March 27th to December 31st. You don't have to pay those in, even though you're going to owe them. You don't have to pay them in right now, but you do have to pay them in equally within the next 2 years. So if on your regular wages, once again, not your sick pay wages and not your wages from the family leave, which are exempt, the other wages, if you have $1,000 worth of withholdings for Social Security on those wages, you can literally not pay those in, but then you have to pay $500 in by the end of 2021 and $500 in by the end of 2022. So that's the deferral part of it.
So I just want to be clear with everyone. So we had the option with the deferral. So most school districts said, we're not going to give this option to the employer or the employees to defer. And I would assume that most school districts are also not deferring for the employer. When we did the poll, there was only 2 people that responded that they were looking at this. That's the only time this applies to. Again, with the CARES Act leave, that shows up on the 941, and that's not a deferral. That's just, we don't pay it, and it's covered by the federal government. It's not a deferral. The deferral is something different that we can choose to have all of our employees take part of, which means we wouldn't pull it from any employee, and we could do it on the employer side also. It's just gonna make more work for us on the back side, and if someone leaves, we're still gonna have to cover it. Just to be clear, there's a lot of questions about the deferral. I just want to be clear that the deferral is something totally separate that most are not doing.
Correct. So if we look at that employer deferral, right, that came from the CARES Act. And then we haven't talked about it yet, but let's talk about it now. And that's the employee portion of the payroll tax deferral. We talked about the employer before, but now let's talk about the employee. Remember, I said whether they're getting regular wages or whether they're getting sick pay wages or whether they're getting family leave wages, their payroll checks look exactly the same. So they're going to have Social Security and Medicare taken off of their checks. Well, based off of a presidential memorandum on August the 8th of 2020, you as an employer can actually not withhold the employee's portion of Social Security in order to get their paychecks to be a little bit higher during this period of time. Now, I see this as kind of a tough issue for employers because it's going to put a lot more work on your end on the end. Now, remember I said, going back just one step, remember I said we're using the July of 2020 form, even though there was things that happened after? Well, as you can see, this happened in August. This is actually accounted for on the new forms that are still dated July 20th. So just remember July 20th is the form that you want to keep using. What you can do is you can actually take the amount of employees' portion of the Social Security, and you don't have to withhold it from their checks. What that'll do is that will increase the employee's take-home pay by the amount of Social Security tax that isn't withheld. But as you can see from a lower slide, or the lower part of the slide, anything that you don't take out now, the employee is still going to owe. The employee's responsibility for paying that in still does not go away. So anything that you don't withhold from this period of September 1st through December 31st, from the employee's portion, that's got to get paid equally between January 1st of 2021 and April 30th of 2021. That's one of the reasons why, when we talk to our employers, we say, this would be a short-term benefit to the employee because they'd have more money in their paychecks right now. But if you look at it, in about 2 or 3 months from now, you just have to start withholding that amount off of their checks anyway. And what happens there? You know, it's right after Christmas. It's right after a lot of bills are due. So it may not be beneficial to the employee at that time to have extra amounts taken off for this employee portion. If you're going to do this as an employer, it's an all or nothing. So you can't pick employee A to take it off of, and employee B says, well, I don't want it taken off. It has to be an employer decision that's going to affect all employees the same way. The one exception to that is for your highly compensated employees. So any employee that has a gross pay of $4,000 or more per biweekly period, even if you decide for all the other employees to not withhold the Social Security portion, you still have to withhold it for them because that particular employee is not eligible to be in this program. And it's done on a payroll by payroll basis. So let's say that you have somebody that receives a bonus on one check and that bonus bounces them over that $4,000 amount. Well, you wouldn't take off, or they would have to pay the Social Security tax for that check. But when they go back to their next check, which is probably below the $4,000, now on that check they qualify. And if you've elected to not withhold, that same employee who a week before, 2 weeks before, could not defer that Social Security for this payroll and future payrolls, they can. So it's a payroll by payroll basis. That's why I think this thing gets really complicated. And that's the other reason why other business owners that we've had, and sounds like people on this call, have decided not to do it. Now, one caveat, additional caveat, is that if you decide that you're not going to withhold the employee's portion of Social Security tax during this period, if you withhold it off the employee's checks, you have to pay it in. So let's say that you say, you know, we're going to defer that amount for our employee, but for some reason, by accident or something like that, you actually withhold it off of the employee's checks. You're required to pay that in. Anytime that you withhold it off the off the employee's checks, it has to get paid in. Like I said, this part right here is probably the most complex area of what you're going to see on the deferral side.
Jeff, will this show up on the employee's W-2?
It will. So I don't know the exact logistics because I haven't, I wasn't able to find one before the presentation today, but the employee's Social Security wages will still remain the same. Their Social Security tax that shows up on their W-2 will remain the same. I have a feeling that there's just going to be kind of where you do some reimbursements on the bottom, that you're going to back out that Social Security, which is included up above on their pay stub, so that their gross check is higher. I think that's how it's going to work because the Social Security wages are still earned and they should still be reportable in 2020.
Thank you.
Okay, so let's take a look at the form. Now that we've kind of gotten some background, let's take a look and see how that background actually applies to the form itself. You're going to be very happy to see that this very first page, which is about a third of the first page, nothing really changes. Just remember your correct form. Remember that when you're including employees, your date for the third quarter is your employees on September 12th. But when you're looking at your line 2 for your federal tax and tips, that's calculated exactly the same way that it's always been calculated. There's no change to that. So this part of the form, really no changes that you need to be aware of. The next slide though is where our changes are. When we're looking, we talked about it, we said, okay, for the sick pay wages and for the family leave wages, the employer does not have to pay in their 6.2%. Well, here's where the mechanics of that actually work. If you have employees that just have regular wages, those regular wages are going to go on your Social Security, your box 5 that's always been there, and that's going to get taxed at a rate of 12.4%. Once again, 6.2% for the employee, 6.2% for the employer. It's going to show up right on line 5 just like it always has. line 5A1 and 5A2, that's where your differences are. Anytime that you pay an employee for sick leave or family leave, those wages are going to show up in one of these two boxes, boxes 5A1 or 5A2. And if you notice, they're only going to be subject to the employee side, the 6.2%. That is where the calculation gets done to show that the employer's half does not need to get paid in. Regular wages, clearly it needs to get paid in, 12.4%. The sick pay and qualified family leave wages, those wages only 6.2%. One thing to catch or to talk about here is that when you talk about qualified sick leave wages, this would be for that first 80 hours of both the sick and the family leave. So both sick and family leave wages go in box 5A1. If you then expand that out to that 10-week period, the extended family medical leave, anytime you pay out those wages, that goes in 5A2. So even though this is family leave wages, the sick and the first 80 hours of family medical leave, they go in line 1, only the 10 weeks go in the line 2. So I just wanted to clarify that. You're not gonna have tips, so you don't have to worry about that. And here's where you can see that for Medicare wages, all of your Medicare wages are gonna go in one box, and it's gonna be subject to the full tax. So the employer, you as an employer, are gonna need to pay in both the employee side, which you withheld, and the employer side, which you're gonna have to pay in. So that's why I said Social Security only, not the Medicare side. And then as most of you know, and there's probably not too many aspects of this, but there's also box 5D, which is your taxable wages and tips subject to the additional Medicare tax withholding. That's been there for a long time, and that applies only to wages after 200,000. So anything up to 200,000, those wages get reported here. Any wages above 200,000 get reported in box 5C and box 5D because it gets a little bit of a surcharge from the Affordable Care Act. That's been around for a while, but just wanted to make sure everybody was still aware of it. Any questions on the screen, Brian, before we move on?
Jeff, I would just say that this is a good distinction here. So the leave that applies to 5A 1 and 2, that's forgiven. You don't have to pay that Social Security tax. So if you're filling in these boxes, it's not deferred, it's forgiven. We'll talk about the deferral stuff later on when we go through the 941. That's correct, Jeff?
That is correct. Yep. Okay, so if we look at the next section is for unreported tips. I don't think you guys have that many of those. Fractions, which everybody knows what fractions are. The one thing I wanted to note on here was the current year adjustments for sick pay. This is not the FFCRA sick pay that we've just been talking about. This would be if an employee's sick and there's a third party payer of those sick pay wages. That's what this would be for. So this is not part of what we're talking about today, which is why I just wanted to highlight it. And then there's also a new line, I believe, for this whole year in regard to the group term life insurance, which a lot of employers kind of figured out at the end of the year. Now they have a listing on that to figure that out, I believe, on a quarterly basis. As we continue to look at the lines, not too many qualified research activities, so that will not be applicable to you. We talked, but then on line 11B, we talked about the fact that there's some employers that actually get a credit for their wages, for their Medicare and for their health insurance. Because the government employers do not, you would not have anything that shows up on line 11B. So there's not going to be any refundable portion of any kind of credits. just highlighting this, that, you know, to show that your 13A is all your deposits. Nothing's really changed on this screen on this line 13 from what you've always done. As we're looking at now this next section, if we look at line 13B, 13B says deferred amounts of Social Security tax. This is one that the terminology has changed here on the third quarter, because on box 13B is where you're going to put any Social Security tax that is being deferred from either the employer side or the employee side. Whatever tax is being deferred, Social Security, that all goes added together and goes in line 13B. And then once again, you're not going to have any kind of refundable credits from worksheet 1. So those two lines, 13C and 13D, I think should always be 0 for governmental employees, or governmental employers, I should say.
Hey, Jeff, before we get too far, I'm sorry, I'm trying to keep up with all the questions.
Sure.
I got to some parts where there's some on 5A. They're just 5A, the first line, they're wondering about if 5A 1 and 2 are included in the 5A line.
They are not. So 5A, 5A1 and 5A2 are exclusive of each other. And the reason why they are is because if we had $1,000 in 5A1, we're subjecting that to 6.2%. And if that same 1,000 was also included up here, we'd also be including that same $1,000 as 12.4% taxable. So essentially we'd be triple taxing it. So yeah, these are 3 mutually exclusive lines.
So really to show the total amount, if you add up all the column 1 and the 5As, you would kind of get what was the 5A total.
Correct.
Okay, thank you.
Anything else on this screen?
I'm sure there are, but.
Okay. Well, we'll kind of go through and then we can kind of catch them as we come back.
Perfect.
At the end. Okay. Once again, if we're looking at the rest of the form, there is a new line on there for 13F, and 13F is total advances from Form 7200. You as a government employer will not have to worry about that. That is something where if a for-profit business or a nonprofit gets the credit, they can actually apply to get that credit earlier rather than waiting till the end of a quarter or waiting till the end of a payroll period by doing a separate form. But since you're not eligible for the credit, that Form 7200 will not be applicable to you. And this is just a copy of it, just showing that really it's just an advance on a lot of those credits that government employers are not eligible for. The next section is relatively new. I think it was new here for 2020 for some of this. But what they're going to ask is they're going to ask for a couple different things. They're going to ask for qualified health expenses that are allocated against sick leave wages and qualified health plan expenses for qualified family leave wages. Once again, line 19 and 20, you're not going to need to complete because you're not requesting or allowed to get any of the credits for health insurance. And so since you don't get any credits for the health insurance, line 19 and 20 do not need to get completed. So those should be 0 when you're filling out your form. Line 21, employee retention credit, that should be 0. Qualified health plan expenses, that would be 0 because that's regarding the employee retention credit. The credit from the 80 or 5884C, that will not be applicable, but this one will, line 24. So when we look back a couple slides ago, there was a slide that says how much did you defer in Social Security tax on line 13B? And I said that was going to be both the employer deferred and employee portion deferred. What they're looking for on line 24 is to kind of break that out a little bit, to tell them, okay, how much of it is just the employee portion of that amount that's included on line 13B. So just the employee portion would go here. We're getting real close to the end, and so then we'll start looking at some of the questions. Schedule B, since you don't get the credit, there's really not a lot of changes. You're going to fill out the Schedule B the same way pretty much that you filled it out in the past. So that's basically going through the entire 941 in detail and showing you which lines that are going to be applicable to you and which lines won't be applicable to you. And so I will open it up for some remaining questions. But what I'm going to do is, while that questions page is up, I'm just going to go back to this line, because this is where it's going to have the most applicability to you as government employers. So maybe, is there other questions that we can field, Brian?
Yeah, there was just a clarification on the credits that most school districts don't get any of the credits that we just talked about at the end. And I know that there's been some maybe some disagreement, but right now we're going with that school districts don't get the credits.
Yeah, we do quite a bit of payrolls in the firm. And I was also to and of course the 941 indicates it. And also I was to a seminar that Paychex put on, and Paychex was in agreement also. So I think the consensus is there. Now that doesn't mean that it can change later. But at least for now, I think the consensus is there.
And from my point, from a district, I'd rather not receive a love letter that I did it wrong. And I would just not do it. We looked at the credit. It was a minimal amount anyways. It wasn't worth getting that letter and any fees or fines for not paying what we should be paying. And
even if it's clarified later, let's say that either the law changes or for some reason it gets clarified or changed later, there's nothing that says that you can't do a 941X, amend the return, and get those credits back anyway.
Correct. There were some questions on that line E. They were asking about the 200,000 in 1 quarter needs to be here. I think that's on your notes there for 5D.
Oh, gotcha. Well, let's see. So 5D is the taxable wages and tips subject to additional Medicare withholding. Like I mentioned before, that's where wages over 200,000 should go. So if during this quarter their wages went to $210,000, even though a lot of those wages were earned in previous quarters, because it went over 200,000 in this quarter, that extra $10,000 that it went over, I should say 200,000 per employee. Let's verify, maybe that's where some confusion is. It's 200,000 per employee. So if now you have 210,000 at the end of this quarter, year to date wages for Medicare purposes, that extra $10,000 would go on line D.
There's a question on here: if the employee's out because a spouse or child is waiting to get test results, would they qualify for the leave? I'm going to say yes. School districts are government employers, correct? I would say no, as it pertains to the deferral, because the government they're talking about the federal government, and it's my understanding that they don't have an option for the employee deferral. They have to defer Social Security for their employees.
Yeah, I believe that's correct.
Yeah, we are not the federal government. We're a school district.
Yeah, and for the credit not being allowed, I believe that government agencies go all the way down to state and local at that point. So that's why we don't believe the credit is allowed.
Okay. Yeah, there was more questions about the credit for medical benefits for those days, and we're saying that that's not allowed. That's those credits that we were talking about. Yeah, that we don't get anything. They're just stating that besides the Social Security, we don't get anything else to offset the benefits because we are a government employer, and that's correct. We will be providing a copy of the presentation and the recorded version after it. I think that's about it. Oh, there's just a for the 941, Jeff, when they're filling it out, should the lines that don't have anything in it, should they just be 0 or can they be blank? Does it matter?
I don't think that it makes a difference. It can be blank or 0.
Okay.
Yeah, and just, since we have a couple minutes left here, just to clarify, for the family medical leave portion of it, see if I can get to that slide here real quick. There is a pretty big difference here, because when you're looking at the family medical, or when you're looking at the family leave wages for the first 10 days or 80 hours, you're okay with considering spouses and, or parents that live with you, or children that live with you, impacting them can allow you to be able to get these family leave wages. But when it comes to the 10 weeks, it really is having to do with a child, a dependent, somebody that you're responsible for, where their school or daycare is actually closed. So that's really the difference between the 10 weeks and the 80 hours, even though they're really both called family leave. And I think that's also the reason why you have 5A, which includes the whole 80 hours for both, and 5A2 that includes just this additional expanded family leave, because I have a feeling the IRS kind of wants to keep track of that for whatever reason.
And Jeff, there was a question on if their employee uses 1/3, if the employer allows them to use sick leave to backfill that 2/3 to make them whole, that 1/3 we would still be paying Social Security on that 1/3.
That is correct.
Yep. So, and most people set up different pay codes to kind of keep track of this amount. And there's questions on if we could just do the math and fill out the forms correctly. I guess I would advise to do it correctly in your payroll system, because I'm sure an auditor is going to want to see that your payroll system matches up to your 941
right
form.
I think a lot of what we've done today is we've kind of talked about what should be included on each line. So I think that should allow people on this call, for the most part, to say, okay, I know that I paid my employees $5,000 worth of sick leave. So because I know that that $5,000 under that pay code was paid, on my 941 for that quarter, that should be my double check that there should be $5,000 here. If for some reason there's not $5,000 here, it could mean that a pay code is set up incorrectly, or that the wrong pay code was used for those wages. So that's why, knowing the rules behind each one of these lines is going to be really good, so that when your system kicks out a 941, you're going to be able to double check it, not just say, well, the system calculated it, it must be right.
Jeff, we do have a question, and I can answer it from what we do, and whether it's right or wrong, you can correct me. But they did ask about if they forgot to exclude the Social Security amount, either this quarter or maybe they had some in the second quarter. Can they go ahead and fix that in the fourth quarter by either paying less or possibly fix it in Q3 and getting a refund. From our district, I don't like to play around with different quarters, so we would make all the corrections in the Q4 and pay the amounts, so we would short the IRS at that point, so that the whole year comes out correctly. Jeff, or am I doing that completely wrong?
So I'm a practical guy, so I'll tell you I think the true way and then the practical way. So the technically correct way is to go back in that quarter and file a 941X, include those wages on the proper lines, which running through the X, that will then get you the refund, which then will come to the school district. Essentially what you've done is you've paid in, if you actually do it and just catch it up in the Q4, all you've really done is you've paid your Social Security tax on the employer portion too early. So I don't see the IRS ever coming back and saying, hey, we're going to give you a penalty because you paid us too early. So I think my real determination would be whether it's material or not. And what material is going to be different for every single school district. But I mean, if you're talking $500 worth of wages, you're going to spend a ton more time trying to do a 941X rather than just, putting it in the Q4 and moving on. Now, one of the things that you are going to need to do is, and I kind of look at the questions too, and I'm glad that the person mentioned it. When you're looking at your W-2, your W-2 for the employee is going to look very similar to the way it was before, because like I said, even for those sick pay wages, even for those family leave wages, you're taking off the 6.2% for Social Security on those employees. But what the IRS is going to want to see is, I think they're going to want to see a notation, and I believe, don't quote me, but it's in box 14, that says how much you paid in both qualified sick leave and qualified family leave wages. I think that's maybe the only difference that you see on W-2s for this year.
That's how we understand it, Jeff. That would be in box 14. All right, I think we're getting to the end, and people have asked for the questions, so maybe we can get a copy of the questions from here, and then we can go through and answer them. I answered a lot of them, and some of them are repeats, so I can work on that over the day.
Okay. If you do have any questions on that, Brian, just let me know.
Okay.
Hey, Brian and Jeff, thank you for this excellent presentation this morning. And thanks to all of our colleagues from around the state who joined us today. I hope you gained some useful information, as I'm sure you did, from this hour that we've spent together. And then finally, a reminder that this presentation has been recorded and it will be made available to you later today or tomorrow. We will send out an email explaining how to access that. And if that, in addition to that, we'll probably post it on the WASBO website. So with that, again, Jeff and Brian, thank you. And everyone have a great day.
Mike, I do want to put in a shameless plug for the WASBO Foundation photo scholarship fundraiser. And just remember, everyone, it's for scholarships for kids. And with the conferences not being in person, we really need to step it up and help out so that we can offer our students those scholarships.
Oh, hey, thanks, Brian. Yeah, WASBO sponsors around $20,000 of scholarships that go to high school seniors as they're entering college. And the source for all those scholarship dollars is either the golf outing, which of course we can't do anymore, or a similar event. And for the fall conference coming up, WASBO is promoting a photo contest, and I encourage you to take a look at it. Thanks again, Brian. And thank all of you. We appreciate it, and have a great day.
Thank you.